Defending your stop losses. What am I talking about? I'm talking about how to defend your stop losses, how to cut your losses, and break it all down in this video. So stay tuned. If you're new to the channel and you want to learn more about day trading, go ahead and hit that subscribe button. If you're a longtime subscriber, welcome back. So today we're talking about how to defend your stop losses. This is a big issue that a lot of day traders have. It's an issue that I have sometimes, but I want to talk about it in this video. What's the idea of defending your stop losses? How can you trade defensively? We've heard about how to drive defensively, how to do all these other things defensively, but nobody ever really talks about day trading defensively. How do I day trade like a linebacker defending my quarterback? So my quarterback is my money, and I'm a linebacker, which I'm controlling the line of scrimmage, which is my stop loss. So we'll think about this line across the screen as a stop loss, and that's the line of scrimmage. So if the other team gets below the line of scrimmage and they get to my quarterback, I'm going to lose my money, and that's what I don't want to do. So I want to be the best linebacker possible. So ARDM was a great example of this. On Friday, it jumped up there from the $2 area up there to $3.25 and then pulled back and then found some support at the $2.80 area. So let's say you bought the dip there. Let's say you got in here at $2.85 right there, $2.82. You got the bottom of that candle, which it's amazing. So you got there at the $2.82 area and boom, this starts to go higher and higher. Well, let's say your stop loss. So let's say you get there at the $2.85 area. Your stop loss is $2.80 because you're like, okay, I'm going to give it a 5-cent stop loss. I'm kind of watching this $2.80 area. On Friday, there was actually a big buyer there at $2.80, so I was holding it up there. That's one of the reasons it didn't dip below $2.80 for a little bit there. So $2.80 was the low on this candle. $2.84 was the low on this candle. So you got in there at $2.85. It's dipping around. It's holding that area. It's getting bought up. It's going higher. It wants to explode. It got up there to the $3.27 area. So boom, boom, boom. It goes higher, goes higher. You sell half at $3.20. It pulls back to the $2.80 area, and you're like, okay, I have half left here at the $2.80 area. If this $2.80 area doesn't hold, I'm going to get out of this trade. You don't want to wait for that stop loss to break. You don't want to wait for that $2.80 area to be gone and then boom, now we're at $2.60. So the real goal here is to sell before the stop loss. Sell before the crash. So you can see this dip $2.82, $2.82, $2.81, $2.80 on this candle, and then boom, down there to $2.64. So watching level 2, I would have seen that $2.80 buyer gone. I would have seen all the selling, looking at time and sales. The time and sales is red, 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 red. It's showing that it's selling into that $2.80 buyer. The $2.80 buyer can't stay there forever. And boom, it crashes down there to $2.60. Boom, it's all I ever say. I don't know why I'm saying boom so much, but you get the idea. So from the $2.80 break, it drops to $2.60. So if your stop loss was a $2.80, and let's say you had a hard stop in there, and you had a market order, and you got out there at $2.60. So that's another 20 cents that you added on to your loss there that you shouldn't have done. You should have been watching that $2.80 area very carefully and then got out selling into that buyer there at $2.80. So if the $2.80 area breaks, you have got to get out of that trade. Don't be slow to get out of trades and then be fast to take profit. That's one of the things I have issues with sometimes. A lot of times people have issues with. They're fast to take profit, but they're slow to cut their losses. You don't want your losses to be 50 cents and your wins to only be 20 cents. You're never going to win that way. Even if you win 80% of your trade, you're still going to end up losing because your losses are so big. You need to be able to cut your losses fast. Get out of your trades no matter what. Just cut the loss. Get out of it. Hold the line of scrimmage. If it doesn't work, cut the loss, get away, work to the next trade. Let's say ARDM crashes below 280. You get out there at 280. You're like, wow, it went down. And then all of a sudden it starts going higher and higher. And you're like, oh man, why did I cut my loss there? It's going higher. I could have waited. I could have gave it more time. But you got to think about it like this. There's going to be days where you're going to have trades that are just going to kind of be hard. They're going to be choppy. You're going to get out of it for a loss. And then boom, it's going to go higher. And you're going to think like, oh man, I need to be able to keep a bigger stop. But at the same time, let's say you have 2 trades a week that you could have worked or you got out too early or cut your loss too early and you end up losing on it. And then the rest of the week that worked out for you. So you had 2 trades that the stock reversed after you got out. Then you had 10 trades that the stock kept going lower and lower. And it's a better way to trade knowing that, hey, I cut my loss consistently. I got out of the trades consistently. I made sure my losses were that 10, 20 cent area, what my goal was. I had a couple of trades where obviously the stock went higher. I can't tell the future. I don't know exactly what's going to happen, but at least I was consistent with the plan. At least I was consistent with cutting my losses. Someone the other day told me that they bought a stock and it dropped $1 and they were still holding it, hoping that it might go up. You got to remember, a lot of these stocks that go up 100%, they're going to go right back down. So they're going to jump up and they're going to crash. So ARDM, it ran up 100%. This thing could easily go back down the next couple of days and end up back at $2. So you don't want to be holding this. You don't want to buy at $3 area and hold for the drop to $1. This is not a long-term investment, guys. We're not buying these stocks to hold for a couple of weeks. We're buying them for those momentum moves. We're getting in there at $3 area. We're selling at $3.20, taking profit. We're not being greedy, overly aggressive. We're just doing consistent gains, every day, $200, $300, $400, $500 every single day. And as your account grows, you can add up more size. You can get 10,000 shares of a stock like this. You had 154,000 on that 1 minute candle. You had 100,000 on that 1 minute candle, another 200,000 there. So you could have bought 10,000 shares here at 288 and slowly been selling those into this move to the 320 area and made $1,000 on just this little move. But you need to be able to do that. You need to be able to understand that you need to cut your losses. You don't want to buy 10,000 shares and all of a sudden the stock just drop, and you get screwed. Either way, you got to just cut your losses, be very strict. You need to be a linebacker. Bulk up, be a linebacker, hold the line of scrimmage. The stop loss is your line of scrimmage. If the stock price goes below there, you got to get out, and you got to get out fast. Don't wait for it to drop. Support there, it's about to crack, it's about to go lower, sell into it, get out, be done, move on. If the stock goes higher, look for another opportunity then, but you can't sit here all day long and go, what if? It needs to be consistent. You need to be holding that line. You need to be a defensive trader. Be a defensive trader, defend your money. Remember, your capital is your quarterback. You're the linebacker. You need to make sure you protect your capital. The more capital you have every single day, growing that small account, it's going to make your account bigger and bigger and bigger. So you don't want to lose extra $100 on a stupid trade where you didn't cut your loss fast enough. So that means you got to make that money back. And you're always thinking like, oh man, I lost $100 on this trade. I need to go bigger on the next trade. And then you're going to really mess up yourself mentally. You need to be consistent with your sizing, consistent with your stop losses, and consistent with taking profit. And those three things right there will make you consistently profitable over time. So try it out, become more defensive. Remember, cut your losses fast. Be as fast as you are to take profit to cut your losses. So think about that. How many times you've taken profit fast and at the same time you've let your losses run down. So you've taken profit with 10 cents gain and then let your losses go 30 cents. So be consistent. Be consistent. Try it out. Be a defensive trader.